recording. So this Aaron the Trucking Guy, man. We're back with another channel. I got a special guest here, John with Trucking Wins. Go ahead and introduce yourself, man. Tell us a little bit about yourself and what you guys do over there.
All right, Trucking Guy. I'm glad you have you on your show. I appreciate it. My name is John Seidel. I used to be a state patrol inspector for 12 years. So I did the roadside inspections, worked the scales out on the road. Then I was an investigator with the feds for about 8-9 years. So I knocked on company doors. I'm the one that issued those bad ratings to companies, gave them fines and penalties. Then I became a hazmat guy. That's crazy, for the FAA. So it's still a DOT job, but now I was doing hazmat on airlines, right?
Seeing it from all angles.
What's that, man?
Seeing it from all angles then.
Yeah. You'd be surprised how much hazmat are on airplanes. It almost scare you. You just take a train instead. Right? So 23 years I was a government regulator. Now I sell truck insurance and I'm a DOT consultant. What do I love to do? I love to talk to drivers. I always say the drivers are what push this thing. You can be a company owner all you want. You can be a shipper receiver, but without the drivers, man, freight wouldn't move. So I like educating, talking, and helping drivers, right? So that's me in a nutshell.
Okay, nice. Where are you guys out of? You're out of up north somewhere, right?
Yeah, I'm in Wisconsin, man. I've lived here my whole life. I have a place down in Florida. I kind of bounce between the two, but I do travel the country. I got customers from New York on the insurance side and or consulting side, all the way to Florida, to Texas, out to California. Heck, I've been down by the southern border in the commercial zone. I got a couple customers down there too. That's a whole new topic of conversation as well.
Right. Nice, man. Yeah, so you've seen it from, every spectrum. So that's awesome. We've been wanting to get you on here for a while and get this perspective on here, So
I appreciate you.
But basically, I just wanted to get in a few questions, man. Number one, we talked about your background now, and that was good to kind of build a little bit of a path of where we're going here. But one of the questions that I wanted to ask is, what does a field officer look for in an inspection? What, because a lot of guys ask me this and a lot of my clients ask me this. And when I'm telling them, they're always like, what do you look for? So do you look for a clean truck that you can get an inspection over quick? Do you look for a truck that's got problems, or is it day by day? Or what do you really look for when you're doing roadside?
Well, when I was a state patrol inspector, right, I always joked around that 4 inspections a day keeps the sergeant away. I wouldn't call it a quota per se. I would just say that you got to do some inspections. Heck, you're called an inspector, you see?
Right.
So if I spend like 2 or 3 hours and I'm not doing much, and I'm like, man, I got to get some inspections done. I'm not going to grab, Renegade Trucking, who looks like they got 20 violations. I'm going to go grab a straight truck, right? Doesn't have a trailer. It's easier to enter. And then I'll get that one inspection done. Maybe I'll pull over a UPS truck, right? Because they're a pretty safe company. I get my 3 inspections done. I got a couple hours left, but I don't have a lot of violations. Now I'm going to look for the guy with issues. I might look for a guy with a dirty truck. I'll look at stuff in the windshield. They don't clean out their windshield. They probably don't take care of business with their vehicle. I'll look for obvious violations. If a company doesn't have reflective tape on their trailer or on their mud flaps or on the back of their truck, that's an attention to detail thing. If you can't even put stickers on your truck or your trailer like you're supposed to, you think you're checking push rod travel and fire extinguisher, emergency triangle, you think your log's squared away. So that's kind of how we do an inspection. But there's level 1s, level 2s, and level 3s. There's other levels, but we won't get into those. Those are the predominant ones. If it's raining outside,
different levels, the level 1, what it consists of, and the level 3, because that's the majority of what we get. We've got about almost inspections, and they're all mostly level 1s and level 3s.
Well, a level 1 inspection per the feds is equivalent to an annual DOT inspection you would get at a TA, right? That's where they do a walk around, they check your undercarriage, and a level 1 will also check all your credentials and your logs. A level 3, that's where they're not checking the truck at all. They're not even going to look at brakes, lights, tires, push rod travel, fire, none of that stuff. They're just going to check your paperwork and your logbook, your CDL, a little bit of registration and IFTA. You do a level 3 when it's raining outside or it's too cold.
Right.
That
makes sense. I've seen them do that, in the colder part of the country, unless it's a really pretty day or if it's raining or nasty, they'll do a level 3.
Yeah.
So level 3 consists of, it's just basically where they're going to do paperwork only, right?
Paperwork only, but they're going to check your log. What you have to realize is every inspection you get, they're going to look at your logbook. They're going to look at your hours of service. Then when it comes to CSA scores, it's a very interesting caveat. You got hours of service CSA score for, your CSA for the government, and you got vehicle maintenance. Number of inspections based on a time weight situation is how they calculate your hours of service and your maintenance. Level 1s, 2s, and 3s can help you reduce your hours of service score by getting a bunch of clean ones with no logs. But
Right.
only a level 1 or 2 can reduce your maintenance. So if you get too many level 3s, it's great because they're not checking your truck, but you can't drive down your maintenance score with that. So if you
Right.
need extra inspections for your maintenance score, you might want to say, hey, can you do a level 2 or a 1 on me instead of a 3?
Yeah. Okay, that makes sense.
Yeah.
That's another question you brought up is, hey, you know, I've had guys try that call me and they have a bad safety score. And I'm like, man, you just got to get some better inspections. We got to clean this up. And they're like, well, can I go ask a DOT officer at a weigh station if they can do an inspection? And a few of them try, like, I don't have time, or no, we got to do it a different way. We can't just have you come in when you're ready. We pull randoms, you know? So has that ever happened where a guy said, can you go ahead and do a level 1 when you were in the field and you did it, or no?
Well, I would say if you're going to ask an officer to do an inspection, you're likely not going to get them to do it. But you guys want to hear a crazy story, man?
Yeah.
Crazy CSA story. I just told you that your hours of service CSA is dictated by how many level 1s, 2s, and 3s you get as long as you don't have an hours of service, right?
Right.
But if you don't have a front plate, now I'm not advocating this because this is a bad idea, but hey, we're just talking trucking here, right?
Right.
If you don't have a front plate or you don't have no IFTA or your vehicle marking is wrong, you get pulled over, that doesn't hurt your CSA score. So if you ask for an inspection and he says no, but then you in turn remove your front plate and they pull you over, write you up for the front plate, but you get a clean log, then your CSA scores goes down. I have a trucking company. I told him this, and he literally took his plate off, went over to scale, got pulled over twice. Those 2 inspections clean other than the front plate, drove down his CSA. So he went into renew with a clean score. Crazy.
Yeah, I could see that because we've had times where, you know, especially during COVID, we couldn't get the plate and we're running on a cab card and it's all legit, but we didn't have that front plate on the truck because they wouldn't get it yet, or it came in the mail or whatever. And with COVID, you know, everything being slow, and then when they get more inspections, they get pulled in a lot. But usually they'll check and say, hey, man, you're good. See you later. And sometimes they've done inspections. So I can believe that 100%.
Yeah.
So with you being on the Fed side, so for people that don't know, that's being on with FMCSA as basically an auditor, right? To audit companies to see, you know, if you get a bad one, they're going to send you out to do an audit, or a lot of them are done online, right? You know, through like a portal, right? Or nowadays to be, especially with COVID. What does an audit look like from your standpoint on when you used to do them? I mean, what did you look for? What did you focus on? And what did it look like for people on the good side and on the bad side?
All right. So just to clarify terms, right? The federal government calls an audit a new entrant safety audit. So if you're brand new at a DOT, you're going to get a new entrant safety audit where they just ask you a bunch of questions. You either pass, fail. Then they have something called a compliance review intervention, right? They use that term. You can get a full review where they come knock on your door, they check everything, or you do it remote and they check everything. Then they have focus reviews where they only look at certain areas you might have got a complaint in, or you have high CSA scores, right? So focused interventions can result in fines and penalties and bad ratings. Safety audits only result in pass, fail, and those are new entrant.
Okay. So I'll just give you a kind of an example. When we did our new entrant audit, we actually failed it on, I don't remember what it was now. It's been like 6 years ago, but we actually got to do a corrective action plan. So it was, you know, what are you going to do to correct these problems? And so you worked with the corrective action plans on companies because you want to keep people in business, and your job is to just make safe on the road. You're not out there to really put somebody, you know, take food off their table or get them out of there. You know, you just basically want to see them be successful and do it right and operate legal and compliant and safe. So what does that look like on a corrective action plan if they're doing it wrong? And have you seen those not go well and it didn't work out for them?
Oh, yeah, man, I've done so many. They call them 385.17 because it's 49 CFR part 385 in the regs, and it's 385.17 that outlines this cap, corrective action plan, right? If you fail a new entrant safety audit, you need a cap. If you fail a compliance review and end up conditional or unsat, a 385.17, the same process, is the only way to get back upgraded to your previous rating, you see? Okay. So corrective action plans are used for both new entrant safety audits and adverse ratings during full or focused compliance reviews. Remember, I just said there was a difference.
There's a difference. So say a guy comes in and wants to do a focus group. Like I have a client, for instance, he's got like an 80%. He's had a bunch of out of services. He's had a bunch of failed inspections. So he's going to probably get a focused review or an audit, right? So what does that look like when you come in and you're looking at the different categories on unsafe or just paperwork or, specific type things, or are you looking at everything, or is it both?
No, when the investigator comes in, they're going to look at the entire company from drug testing to CDLs to DQ files to maintenance to logs, all the gamut on a full review. But they may just come in and do a focus review and just look at hours of service because that's maybe your problem, right?
Right.
That might be your problem is just hours of service. So if they come in and they do a focused audit on hours of service, they're going to look for what's called acute and critical violations, but they're also going to look for violations that are not acute and critical. You might be saying, well, what's the difference, John? In that same section, part 385, in the very bottom of that regulation, it has a section called number 7. It's a list of acute and criticals. If you have a violation you do wrong once, it's acute. Like knowingly using a positive driver is acute. But if you have false logs, you actually need a false log rate greater than 10% of the sample size to end up conditional, right? So on an investigation, you might end up with a conditional rating because you have false logs at too high of a rate. So when you do a corrective action plan, all you have to address is the acute and criticals you got during that review. You might have got another 10, 11, 12 violations that aren't acute and critical. They're not as serious. You don't have to address those, only those acute and critical. And there's a list right on a website that'll show you what those are.
Okay. So say a guy has one truck, like in our case, we have a bunch of trucks. So we're able to kind of spread that out a little bit. Whereas one guy has one truck and he has, false logs, doesn't have his consortium together, things like that. He's going to have a problem because he can't meet that other threshold of a percentile because he doesn't have any other trucks to spread it out. Right.
Well, the government gives us sample size. So let's take logbooks for an example. If you got between 1 and 5 trucks, they're going to look at every driver. If you got between 5 and 14 trucks, they're going to look at 7 drivers, right? And then if you have between 15 and the next step, they're going to look at 11. Then it goes to 17, then it goes to 27. So they have these sample size based on the size of your company. Schneider National, they'd pick 27 drivers. And the feds have to pick those number of drivers times 30 days. So let's say your sample size is 7, but you got 20 trucks, you just mentioned. It would be 7 drivers times 30 days, 210 days checked. They have to check that amount. That's the math problem. If you're 10% or more in any log category, that's when you're conditional if it's a critical type violation. So what is that? 7 drivers, 30 days, 210, 10% is 21. If you have more than 21 critical false logs, you're conditional. You got more than 21 14-hour violations, you're conditional, you see? So if you're missing form and manner, well, that's not critical. So if you get a bad rating, you don't have to address that in your upgrade request.
Right. So how does the guy come back from conditional? He does a corrective action plan. He probably has some fines he has to deal with. What does that look like? He's just got to pay the fines, deal with it, build a corrective action plan, do better going forward, submit better paperwork, pass, and then go back to business as usual, right?
Yeah. So let's say you undergo a review. You end up with a conditional rating, and they're going to give you a fine and penalty. Your rating is going to be effective 45 days from the day of the closeout if you're a hazmat carrier. It's going to be effective 60 days from the day of the closeout if you're a regular carrier. So you have that time frame to do that upgrade before it hits the system so all the brokers and everybody else will see it. Once you hit that day, you can still do an upgrade. So you have to demonstrate how you corrected all those acute and criticals. And then if you have an accident factor that's greater than 34% out of service, you got to demonstrate that. If you have a crash factor that's that's outside rural, it's like across the country, it's 1.5 crashes per million miles driven. So if you're over 1.5 per million miles, you're over 34% out of service, you have acute and criticals, you need to address those. If you address those in a big packet of information to the feds, they'll give you an upgrade within those time frames, right? Now your penalty is separate. Penalty's separate. They're going to give you a letter, and within 30 days, you have to ask them to negotiate your fine and put you on a payment plan interest-free. How many trucking companies just pay the fine? Lots, right? But you don't have to do that.
Right. That was another question. That's a good topic right there that wasn't really on my list here. But what is a lot of clients of mine ask me, what does that look like if I get fines? Does that put me out of business? Do I have a time frame to pay it? You said 30 days. If I don't pay it within that 30 days, do they yank me down or my authority? Is there a way to set up a payment plan? How does that work?
All right. So let's say you get a fine and it's 10 grand. You get that in the mail, you pay it, you're good to go. You can continue to operate. Even if you have a conditional rating, you can continue to operate. An unsat rating, you have to do an upgrade, but conditional, you don't have to do it within a certain time frame, but you get that 10 grand fine, you pay it, you're good. But in the letter, in section B, you can send them a request for binding arbitration where you don't dispute the penalty, you just want to negotiate the penalty. You send a little letter to them, certified mail or regular mail, they'll call you on the phone, they say, hey, 10 grand, how about this? We'll give you a fine for 5 grand and we'll set you up on a payment plan. What can you afford? Well, I'm good for $200 a month, right? All right, we'll set you up $200 a month for 2 years, no interest, and then you remain active as long as you keep making those payments, right?
Yeah, agree to it, right? So, now when you talk about the upgrade, if you're on an unsat, which is unsatisfactory, you're talking about getting upgraded to a what?
All right, so there are 4 ratings, 4. And I have a nice white paper we can possibly put on your website if you got that, and they can read through this. I mean, I can send it to you. You have non-rated, you got satisfactory, you got conditional, and unsat. You can operate for the rest of your life with a non-rated, a satisfactory, or a conditional. But an unsat, within that 45 and 60 days, you must put in a corrective action plan and request an upgrade. Are there companies that can jump from unsat all the way to non-rated and satisfactory? Absolutely. Are there some companies that only fix some of it, so they go from unsat to conditional and then they can continue to operate? Yes, it's a whole gamut. It could result in any one of those.
Okay, so basically the job and what Trucking Wins does is you kind of train people how to, if that happens, navigate up so they're not going out of business, as well as just staying compliant.
Well, I mean, here's Trucking Wins. We're an online training portal. We're here to try to educate safety directors, owners, and drivers to improve their company. What's the end goal? Let's make as much money as possible. How do you do that? Increase revenue. How else do you do that? Decrease your expenses. What expenses? Maintenance, payroll, fuel, and insurance. So we're here to help you try to reduce your CSA scores, control your losses, educate you so you can reduce those expenses. At the same time, let's talk hours of service sometime. If we can use hours of service to our advantage, like split sleeper berth, adverse conditions, personal conveyance, yard move, well, that might improve efficiencies in our route running because we're using these exemptions to our advantage. That brings in more revenue. So if we can increase revenue, control costs, that's what Trucking Wins is all about.
Nice. And I'm all about efficiency, man. I know all about how that works. It's the small things that get you in the end. Okay. One of the biggest questions, I get this all the time, and I get it in comments on Instagram, YouTube, everywhere I have, my clients tell me, why do you think Hotshots per se, like a dually, whether it be non-CDL or CDL, pulling a flatbed trailer, why do they get pulled over roadside more, get inspected more, get pulled into the weigh station more so than a semi would or any other type of truck?
So let's break that into 2 categories of hot shots. Let's do straight truck, right? No trailer, over 10,000 pounds or higher in a straight truck. When an inspector needs to get their MIXAP certification, right? They have to have so many level 1s a year, which is that full inspection I talked about, right? If you need 32 level 1s a year before September and you don't do a lot of inspections, the easiest way to enter an inspection is just to enter in one little straight truck. You don't have to enter in a trailer. You don't have to check any other equipment. So it's like in and out quick. So I bet to tell you, if they did a statistical analysis, straight trucks get picked on more than most. Now let's take a dually pickup truck with a 5th wheel, 3-axle trailer hauling freight as a hot shot, right? Immediately officers feel like, well, hot shot, that kind of load, why aren't they running a tractor trailer? Right. Is it because this load's in high demand and needs to get there quick? Does that mean it can't be done within the hours of service requirements? So you end up being an hours of service target as a hotshot operator because the assumption is why you're running lesser than full loads. Is it because you're getting paid a premium to get it there quick?
Right. I got you. When you were doing roadside, did you see more violations on the smaller trucks like that, the hot shots with the dualies, or were you seeing them more in the semis?
I'll tell you, I think it all has to do with drivers, right? And company owners. If you have a good culture as a company owner and you're a caring driver that pays attention to detail and is willing to get the items fixed necessary, it doesn't matter if you're in a tractor trailer or a dually pulling a trailer. You could have a tractor trailer that's just filled with violations and a dually pulling a fifth wheel with 3 axles with a piece of equipment on it that's better than most tractor trailers. So I don't really think it's the industry per se or the types of vehicles. It's who's behind the wheel and what kind of company owner. And that's what Trucking Wins is going to try to do. Improve the knowledge of the driver behind the wheel and improve the safety culture of the company that's managing that driver.
Right. Okay. Yeah, I definitely see, like with us, we're about 50-50 semi to hot shots. And when I say hot shot, I mean a dually with a 40-foot trailer flatbed. And we get, I mean, I had a guy get 2 inspections. He had 3 inspections, level 1s in 1 day, or 2 days. Sorry. He had 2 in 1 day, 1 the day before, all in 3 different states. And they told him, we just wanted to pull you over because your truck looked nice and clean and new. We wanted to get over with quick. And I didn't feel like messing with a dirty truck that I had to give a bunch of violations to. And he passed all 3 of them. But it's just a lot of inspections, in a time frame.
Mm-hmm.
And with the sticker on the front, the little, pass attaboy sticker, our semis don't seem to get inspected once a year, once every 6 months. They just don't see the hot shots do. So that's a question that we definitely, just wonder why they pull them over some more. My response has always been that there's so many people doing it illegally or wrong, or it's a cheaper way to get into trucking. So people aren't educated. It's basically lack of knowledge on what you need to know.
One more thing about that, trucking guy, I'll tell you. There's push rod travel in a tractor trailer because of the air brakes.
Right.
A truck pulling a 40-foot flatbed, it's hydraulic or it's electric, right? Or it's a surge brake. You don't have to do a bunch of air brake chamber measurements if you pull over a truck with a trailer like that. So the inspection's easier. So do I think some inspectors pull you over because the brake checks are much easier to do? That inspection will be in and out a lot quicker. I think that's truth, right? There's truth to that.
Yeah, that's definitely what I think too. So in a nutshell, what's it take to be compliant? Okay, if you were just to tell me, hey, with the amount of size we are, or even a guy that has 1 truck and he has his own authority, or he's an owner operator, whatever, what does it take to be compliant and operate a successful business as far as DOT compliance is concerned?
Well, I would break that into roadside inspection and then break it into audit compliance review, right? Because there's some things at roadside that you can't check that the company's supposed to do on the back end. The drug and alcohol clearinghouse is a good example, because if the company's not doing their clearinghouse checks on the back end, you can pull a driver over, find out he's prohibited in the clearinghouse, but the carrier didn't do it on the back end, right? So ultimately, if you can control your roadside inspections, your hours of service, your unsafe driving, your DOT crashes, your maintenance, your hazmat, your driver fitness, CDLs, medical cards, you keep your CSA scores low. That means your roadside compliance is top notch. If you do that, the feds are never going to come knock on your door unless you have a bad crash or a complaint. Do you know that if you have no CSA alerts and nobody complains against your company and no one has a bad crash that is high profile, chances are the feds are never going to come knock on your door, right?
Right.
Now, if they do knock on your door, you better pass that audit or that intervention, yeah?
Right.
So
right.
2 levels of compliance, in-house, roadside.
That's a great point. And something that I didn't really have on the list here either that I sent you, but something it's kept me up some nights just as a business owner with a little bit of stress. People ask me about it. What do you do? I don't have any insight to it yet. I hope to God I never have any. But what does it look like in a fatality? Have you ever seen it? Whether the driver died or the driver killed somebody else or within an accident, and you have to go, obviously it triggers an audit or whatever right away. So what happens in that case? I mean, how do companies move past that? 'Cause, I've looked it up. Schneider, JB Hunt, some of these big carriers, Landstar, they've got 30, 40, 50 fatalities, in Swift and stuff, and they're still running. So how do you get through? I know they're self-insured. They have tons of money. They started a million years ago, so they have a huge advantage over what we have to deal with now. But how, say I have a fatality tomorrow. Well, how do I get through that? How do I stay in business? How do I stay compliant?
Well, here's what I'll tell you. A lot of people think that because you have a fatality, the feds are going to come knock on your door and dig through your back office. That is not true. I would say the majority of fatalities that occur do not prompt the feds to intervene into your company. Why is that, right? Well, if you have a fatality and you don't have bad CSA scores and the fatality was or was not your fault and there's no triggered item, the feds don't have a computer database to target that to come see you. Let's say the fatality happened in Texas, but you're a Wisconsin carrier. Well, the division administrator and the assigner of the compliance reviews in Wisconsin won't even know that fatality happened until well after the fact. So to think that a fatality always prompts that kind of investigation, that's just not true. I have many examples where it doesn't. And
Okay.
once they come in with a fatality and they do check your stuff, as long as you're doing everything right, they're not going to shut you down because you're going to have a satisfactory rating or be non-rated at the end of that intervention. So you
Right.
pass that review, they can't shut you down just because you have a fatality.
Okay. Okay. That makes sense. And that's definitely good insight right there. So what does that mean though? I mean, so basically the big deal is going to be if it is your fault or your driver's fault or whatever, you're going to go with the insurance side of it, and just lean into that and say that, the insurance is going to have to deal with it, fight it out. It could go to court. It could result in nothing, or it could result, in how you want to take care of it. Right. But yeah, that's kind of one of the biggest questions I've had, because I get that a lot, is fatalities. What do you do when that happens?
Yeah.
You mentioned that you also deal with insurance. I've got a couple of questions about that too. I ask many people. I've had a few different people on the show about that. But what does it take to grow? Because I know when you first start a company, especially with a Hotshot company, a lot of guys go buy a dually, they go buy a trailer, they get insurance. Sometimes it's with Progressive or Berkshire Hathaway, one of the ones that'll write new authorities, and they pay a premium for the insurance for the first few years. But you constantly hear, don't say you want to grow. Don't say you want to grow. You want to grow by one truck. Like, it's a scary thing to grow. When I came on, I said, man, I don't want to hear that. I want to grow to 100 trucks. And everybody's just like, it's like fingernails on a chalkboard. The insurance agents went nuts. Don't say that. Grow up one a year, like OIDA. Some of these, they'll only let you have one a year. There's so much limitation on that. From an insurance sales or carrier perspective, what does it take to grow a truck like JB Hunt did back in the day? What does it take for me to be the next JB Hunt? How can I get to, because I always tell my clients, the name of the game is insurance. You have to partner with a good insurance company. You have to keep good safety scores to keep the insurance company happy, so you're not a bad apple and they don't want to insure you. You have to become friends with them. And the worse you grow your safety score, your liability, they want to get away from you. But what does that look like? What's a good carrier to get with, a good market to get with? What's some good things to do to go from 0 to 100 trucks?
I mean, so here's what I'll tell you. Everybody's afraid of growth because a lot of companies don't grow right. You might have 2 or 3 employees in your infrastructure. You add 100 drivers overnight. And I say overnight, I mean in the first few months. Well, if you don't hire the back office support to control that, they can get out of control, and the insurance company ends up paying a lot of rates that they don't want to pay. So now in reality with insurance, there are some markets, I don't care what you say, you are not going to be able to grow to 100 trucks in a couple of years, even 3, 4, 5. But we have some markets, they embrace growth. It's not a problem. Now, are you generally going to pay a little more? Yeah. So perfect example. This just happened. We're about to bind the account. This guy's been in business about 4 years. He's about 70 trucks. He's able to grow that high, but it's been a struggle. He's got enough capacity to grow up to 200, 300 trucks. So we found him a market. He's paying $1,000 more a truck on auto liability than he used to, but he can grow as much as he wants. And he can hire drivers with any amount of experience because that market is okay with it. What do they do to compensate for that risk factor? Charge a little more. There's a lot of companies that are willing to pay a little extra money to have the freedom to hire who they want and grow at their pace. But this company had to demonstrate some real good safety culture. How did they do that? They're teamed up with me at Trucking Wins and through the insurance side, right? So then the market is more comfortable because they know they got a guy helping them that knows what he's talking about.
So that's a perfect example, is just finding the right agent and finding the right partner or to develop that safety culture. Because I know we're looking right now trying to push over to that fleet reporting side and get and make the big step to 100 trucks. And it's been like they want tax returns, background check. They want credit checks. They want everything. It seems like a full safety plan and protocol. They want to know, like, we've had some violations happen. They want to know what happened here. Did you write this driver up? Did you terminate this driver? What happened here, here, and here? You know, we don't have any accidents or anything like that, but they still want to know about every little incident. Are you seeing that as companies like, say, myself, want to grow from, 30 to 100 or get to that upper level? Mm-hmm. That's what it takes, is just a whole lot more elbow grease and really being transparent to that company that you're trying to partner with.
Well, listen, if you're an employee and when you want to get a job and that job is competitive, you got to sell yourself. You got to demonstrate to them that you're a better employee than all the employees around you. Why would they hire you over the other 100? So here you go. There's 100 companies that want to grow. There's 100 companies that want to do what you're talking about. How are you better than them? So all this stuff they're asking is just for you to demonstrate why you're a better option than the other 99 as it relates to growth. Because if they just give everybody a quote, they're going to get burned by the ones that don't know what they're doing. So it's my job as an agent and your job as the owner to work together to paint a picture to the market that you're different. How do you do that? We need all those things, right? We got to tell a story. And that's what we did in this other company. I said, I had the CEO from the insurance market on the line with the owner, and we sold that CEO at the insurance company. This is the right fit client to do this kind of growth. And he agreed, took a little premium per truck. Everybody's happy.
Right. Another question I have would be, what is it, and with that client per se, we don't have to get into any of their real details, but are they more of an owner-operator based or an asset-based carrier? And what does an insurance company like? Do they like asset-based, or are they okay with the owner-operator model?
There are some insurance companies that are afraid of the owner-operator model, and there's other insurance companies that embrace the owner-operator model. It's just a matter of different philosophies. A lot of companies, insurance carriers will say the owner-operator cares more about his equipment, cares more about his CDL because that's his livelihood and that's his business. Where a W-2 driver, regular employee, they're driving company equipment. They don't care. It's like renting a car. Do you care about the car that you're renting versus the car you own? Maybe not. And then do they really care about the company? Maybe not. They think that driving jobs are a dime a dozen. So if they get a few violations on their MVR, so be it. But insurance carriers take a different approach to that. There are some that embrace owner-operators, some that stay away from them, and vice versa.
Right. Another one would be, okay, say I'm a brand new carrier. I just got my authority, right? And I want to go to 10 trucks. What is a good market? What's a good, basically preemptive plan for me to put in place to get to 10 trucks, say in a year or 2 years? Is that possible? What do I need to put in place to get to that level? And then what's the next step for me if I want to go to 30 or 40 trucks? Is it fleet reporting, or is it just a completely different market, or what?
So we have one market that is kind of the entry level market. And, I don't want to say names on the show per se. Call us up. We'll give you some advice on the insurance side. But I'd say the majority of companies go straight to this market. You can only be 20 units for power units or up to 40 total pieces. They'll let you grow, but they charge you exorbitant rates because you're less than 2 years. They look at the MVR. They charge by age of driver. So if you can weather that first 2 years, then you open up a whole nother avenue. They're not the only market. There's some up and coming markets. We got a market out of Arizona. They don't care if you're brand new, but however many drivers you start with, let's say it's 8, they'll only let you grow by 10% in that first year. You start with 2, you can go to maybe 3 or 4. You start with 10, you can go to maybe 11 or 12, right? That's about the only growth they'll let you do. So it all depends on the markets. And I'll tell you, there's a lot of trucking markets out there. You need to find an insurance broker that has access and understands all of them.
Right. That's where you would come into place, where you really have the DOT background to understand it. So, how important do you think it is to have an insurance agent that really understands what you want to do and where you're headed and what your goals are, as well as how to get there the way you do with the DOT compliance side? Because I tell all of my clients, if you screw up your safety score, next year you could be out of business. Because it's happened to me where in the very beginning of my business, I made some mistakes and they didn't want to renew me. They said, we're not going to renew you. Go take a hike, find somebody else, or their polite way of not renewing is giving you some quote that's just not even, it's impossible, 50,000 a truck or something. So, and then you got to go shop other markets, and maybe there's not too many that will you don't have a second option because you screwed it up so bad,
Yep.
So what do do when they're in a situation like that? Are they just going to have to pay the premium? Are they going to have to downsize? Are they just going to have to start over from scratch? What do you think has to happen? Or are they done?
Well, I'll tell you, there's about, I would say 2, 3, 4 markets. No matter how bad you look, I can get you a quote, right?
Mhm.
But you ain't going to like it. You're going to have to open up your wallet, and your wallet might have been thick when you started, and by the end, there ain't no money left in it, right? Because you're going to pay the premium. It's just the way it is. Then we have mid-tier markets. They're kind of wondering whether you're going to go in the route of improving, or you're going to end up being subject to those 3 or 4 markets that'll write anything for the right price. Mid-tier. What we always strive for is those top tier markets, those A-rated quality markets that want 2 years in business, 2-year driver experience. You want to drive your rates down. You need to put your company in a position to go to those top markets. What do I have? I got all those markets. You're the one that painted the picture to the market. It's your CSA scores. It's your losses. It's the experience of your drivers. It's whether you're Hotshot versus oversized flatbed versus a tractor trailer van hauler. A lot harder to place Hotshot than it is a van hauler. A lot harder to place flatbed with oversized than it is a van hauler. So the type of operation you decide, that plays a part too. But what am I here to help you with? Put your company in the best position possible through training and education and safety improvements so you can go to those top tier markets.
Okay. One of the kind of the last things I'll touch on, and we'll kind of settle it up here, is like you just said, the type of equipment that you're going to pick. You know, when I came into this, I didn't know a lot about it. And I just jumped into Hotshot because it was easy, and I already had the equipment, and I used it as this is a secondary purpose to construction. But, you know, I see some companies that have, you know, car haulers, they have a dry van, they have a step deck, they have a Hotshot, whatever, they have a couple box trucks. Do you think that company is much harder to place than somebody who just they specialize in step decks, that's all they run. They specialize in dry vans, that's all they run. They specialize in 40-foot Hotshots, that's all they run. Is that company that has a business model that's duplicatable easier to place than someone with chaos, all kind of trucks?
100% yes. So then here's the deal. You have a DOT number. You got an MC number. You just told me you were Hotshot with truck trailer, but you also have tractor trailers. What's
Correct.
stopping a company like you starting a second company and having the one company be tractor trailer over the road, have the other company be the Hotshot company? You can do that legally. It's not against federal motor carrier safety regulations to have 2 companies. You're not doing it to hide from fines and penalties and bad ratings and safety scores. You're doing it because you're making a business decision that is best for you to control your costs, i.e. insurance. Yes?
Right. So, and from that standpoint, because I've gotten that question a lot of people say, well, you know, the insurance companies don't like that. They look at it as a chameleon carrier. But I've always thought if I want to have a McDonald's franchise in Georgia, I open up an LLC and have 3 McDonald's over there. If I want to have one in Wisconsin, I have a McDonald's franchise over there. There's nothing illegal about that. And I could live in Miami Beach. You know, there's no reason why I can't have businesses in California, In-N-Out Burgers or whatever. So I've never understood why people thought like that, because why can't I have a trucking company in Wisconsin but not have chameleon freight or any kind of fraudulent activity, do it 100% legal, and have another one in wherever, you know, just like you said, or have them in the same spot, but 2 completely different sides of the business. I mean, Landstar does it. You know, they have many different companies that have separate, completely separate, you know, entities, but they do divisions.
And I'll tell you, trucking guy, another thing about that is I got markets that will give you really aggressive pricing if you stay regional. You stay within 600 miles, you're home every night or every other night, you get much better rates overall than going over the road. So let's say you got 50 trucks and you got customers that allow you to run local for 25 of the trucks, and the other 25 trucks are over the road. Well, why not potentially spread it out? You lose your economies of scale benefit for insurance, you know, by buying power, but you gain it back in a better rate, regional versus over the road. So you need a business advisor, not just an insurance agent, to help analyze what the best long-term plan is for your company. And like I said, Trucking Wins is about that, earning more money and safety. So we'll help you with all of it.
Awesome. Is the next step from about 10 trucks on, or say 20 trucks, because I know the market that we're in is not fleet reporting policy, but is everything from that point on only fleet reporting policies? or are there other options kind of like the market that I'm in now where I can just add a truck and pay for that truck?
All right. So generally 20 trucks is a pretty good number where you can start getting into a reporting policy. Now, when I say a reporting policy, I'm talking about paying per $100 of revenue. I'm talking about paying per 100 miles or paying per truck, but not on a scheduled basis where you have to add and delete, where maybe you report the trucks every month of how many you had, and that's how you pay. In this economy, though, the one we have right now, if you can't predict your miles and you can't predict your revenue, you might want to go on one of those reporting policies, but number of trucks on a monthly basis or over the course of the year. Schedule kind of stinks because if you add and delete vehicles and you're on a finance agreement, you got to wait till all of that clears to get your money back. So you got a lot of capital circling around you don't get back. The reporting policy is much better. However, there are some markets out there that are direct bill. When you add and delete vehicles scheduled, you'll actually be able to add and delete them, and you immediately get credits and debits to your premium amount on a monthly basis. That ain't so bad. So if I got 50 trucks and I can report them every time I add and delete, but I don't have a finance agreement, woohoo!
Right. And that's what we're with now. And that's kind of the process of that direct bill is the best way for us. Since we've started, we've been on a direct bill. I've never went with one of the other finance agreements, and I've liked it. And that's worked for us, you know.
Yeah.
But we're the complete reporting side now. So you're saying that you can do it based on miles bid. I can say I'm going to do 3 million miles with this amount of trucks. As long as I don't exceed those miles or go under, then that changes the cost.
Yep. So let's say that you say 3 million miles. You take 3 million, divide it by 100, and then they give you a rate per 100 miles, and that's your rate. If you say 3 million and that's your quote, well, let's say business is good and you exceed it by 10%. Well, then you're going to end up paying 10% more of that annual premium because you exceeded your miles. You can go as high as you want, and you just keep paying that rate per the extra miles. You see, the problem is if you go under, a lot of markets will put a 90% on it, like a minimum. So if you have 3 million miles and they put a 90% minimum, you're paying 2.7 million miles no matter how many you run. You have a bad year, you only run 1.8. Sorry, dude, you're paying 2.7. Same with revenue in that calculation.
So it's the exact. That's what I was going to ask is how does the revenue reporting do? They come in and measure revenue quarterly or monthly or what?
Well, a lot of times you'll report your monthly revenue and that's what you'll pay.
Okay.
Then they'll come in and audit your financials at the end of the year to make sure you were accurate, right? And it's the same thing goes. Let's say you have 3 million miles, but you have 6 million in revenue, right? You know, $2 a mile. We'll just throw a number out. I know rates are better than that now, but $6 million. You take the 6 million divided by 100, multiply it the rate for revenue. That's what you pay. If you end up having 7 million in revenue, well, then you add extra million. So you got to balance that out and pay extra. You go below, well, then you're going to get a refund or you're just not going to report that over the course of the month. But revenues generally have minimums as well. So it's a very tricky situation, right?
And our third option for a reporting policy is by the amount of trucks we add and decrease every month. So if we say this month we're going to have 50 trucks and then next month we have 60 trucks, we just pay based on the more trucks per truck increments. I'm imagining. Okay. And then
now here's the crazy part about that, trucking guy. You want to hear this?
Yeah.
Sometimes with the number of units, they tell you to add the number of units on a monthly basis and you pay based on that. I actually have a market. When you hit 20 trucks, they ask how many trucks you have on day one, 20. And then they ask you at the end of the year how many trucks you got. Let's say it's 60. You get it?
Right.
So you grew from 20 to 60. They'll take 20 and 60, add it up, divide it by 2, and that's how many trucks you pay. Crazy. So you mean to tell me I'm only going to pay for 40 trucks?
Right.
That's absolutely right. So if you have 20 trucks and you go up to 60 within a month, you're actually going to pay less than you would if you had 20 trucks and added 60 at the end of the policy. You got to know how that reporting works. Yeah.
Yeah, absolutely. And you're the first guy that really gives me the nitty gritty about what's going on. A lot of people don't understand it. And I think it's because they don't actually do it. There's a lot of 5 truck companies, but there's not a lot of guys in the 100 truck range that are willing to give the insight. What do you think is more advantageous? Which reporting policy or which side of it when you get to that 20, 30, 40, 50 truck Is it reporting? Is it kind of, schedule policy? Is it revenue, mile, or trucks?
What I would say is, what do you think, trucking guy, you can predict in your own operation? Are you real confident how many miles you're going to run over the next 12 months based on the freight in this industry? Right?
Right.
How confident are you what your revenue amount is going to be at the end of the year?
Right.
Let's
Nothing.
say for whatever reason, you don't want to get rid of trucks and drivers, but you lose some freight because it goes bad. Well, then you don't want to be number of trucks, right? Because you have trucks that are sitting a lot, you might have to pay for, and they're not running at full capacity because the freight's not there. So you need to analyze your own company, and you need to predict your own what you think you're going to be doing across the course of that 12 months. If you're not sure, sometimes a scheduled policy is good, but it's no good if you get a market that requires finance agreements by adding and deleting every truck.
Yeah, absolutely. Is there a schedule policy that goes up to that amount of trucks, 50, 100?
Sure.
Or are they all capped out at, the 20, 40 range for direct bill? There's some up there?
You can get scheduled policies for as many trucks as you want. You just have to add and delete them. And there's some markets where if they see an inspection and it's a truck you didn't add or delete, they may cancel you.
Yeah,
That
instantly.
one market I told you about where we got a higher rate, where they let you hire whoever you want and let you grow as much as you want. That's a scheduled policy. You got to add and delete the vehicles. But I'll tell you, if you get pulled over with a crash or an inspection and it ain't on the policy, expect a letter getting a cancellation in the mail from them.
Yeah, absolutely. So, man, this has been a ton of really good insight. I really
Great.
coming on the show, man. We're pretty well going to wrap it out. It's been about almost an hour. And I mean, these guys, this is real information coming from a real guy who really does this. He's done it a long time. I don't think there's this much information out there almost anywhere. So you guys definitely have a great portal, a great tool. Go ahead and tell everybody where they can find you at and what your organization is again so they can look it up.
All right. So our training information is going to be online training portal. We launch next month. It's still in its beginning stages. It's called truckingwins.com, right? So come see us there. You want to learn about split sleeper, personal conveyance, yard move, increasing revenue, decreasing costs, passing an audit, passing an inspection. You come to Trucking Wins. As it relates to insurance right now, I work for Reliance Partners out of Chattanooga, Tennessee. It's an insurance broker that focuses on trucks and freight brokerage. Reach out to me at john.seidel, S-E-I-D-L, at reliancepartners.com. If I can't get you your quote, we got a lot of agents. I can push it out, and we'll take care of your needs at reliancepartners.com on the insurance side. Thank you for your time, man. I appreciate this.
Hey, I really appreciate it, man. We're definitely going to do some more for sure. Facebook, Instagram, you guys on there too, or any other channel? You got a YouTube channel, I think, or anything like that out there?
Yeah, I'm not the big marketing guy when it comes to Trucking Wins. I got another boy on that, but I'm the DOT compliance insurance guy that's going to advise companies how to improve their operation, run more efficient, save money, and be safe, right? So that's my role. I bet you could just Google, I guess, Trucking Wins, find us on all those different feeds. We got a media guy taking care of all that. I stop at what I know well, and it ain't that.
I got you, man. Well, again, I really appreciate you coming out and doing this, man. I really, really do. Thank you so much for coming on. We look forward to doing some more in the future. There you have it, guys. Trucking Wins. Check him out. Look him up. We look forward to seeing you again, man. So thanks. Appreciate it.
Yep. Thank you, too. Appreciate you, too. Keep up the good work.
All right, buddy. Bye.
All right. Later, buddy. Bye.